All right. So without further ado, ladies and gentlemen, I'm Champ Bobbitt. This is Dot Connect Wednesdays, episode 126. Steve is here with us as well. He's gonna drop some gems on everybody today. The title is "The Financial System is Being Rewritten and Crypto is Now Part of US Policy." All right. Tonight's conversation is going to center on a simple but important reality. All right. The financial system right now is currently being rewritten, and crypto is now part of US policy. It's official. This discussion applies to everybody listening, everybody, nobody excluded. So, whether you're a member or not, you do not need to be a trader, an investor, deeply involved in crypto for this to matter, right? If you earn an income, if you hold savings, if you pay rising costs or you're being impacted by this economy and you think about your future, you're already inside of this system. All right. So this applies to you. Financial systems right now, people have to understand they don't change just because of a trend, right? It's not something that just happens overnight. The change always happens because pressure is building inside of the structure. Debt is accumulating. People's purchasing power right now is declining at a rapid pace. Settlement systems are old and outdated. Efficiency is out the window, right? It's dropped. When those type of pressures all happen at the same time, the systems adapt. What we are witnessing right now in real time is not speculation. It's a structural change. The United States right now is updating all of its financial framework. Crypto, blockchain, artificial intelligence, tokenization, they're now all part of that framework. And at the same time, each and every person, institutions, governments alike, they're all hedging against inflation, the currency debasement we're currently undergoing. And what they're doing is they're using tangible hard assets. So you guys are starting to see that in all of the markets. This is why the last two dot connects, we've been pointing you guys in that direction. Now we've previously bought metals and commodities all to you all's attention, especially to the members. So this is nothing new to you all. But I want to make sure that we open up this talk and we have this dialogue so that everybody is on the same page and everybody is getting prepared. All right. Now, at the same time, all of these developments that you're starting to see, it's all connected, right? While you see everybody go into these tangible assets, they all reflect that there's a big underlying shift that's happening right now. And before we go further, I know there's more people that just came in, so I want to welcome you all to the live stream. Right now, this moment, I want to share this clearly. If you are not a member of Skyton Academy, today is the perfect day for you all to join. All right. Right now, we have a 7 day trial for just $1. That trial is going to include full access to all of the courses, discussions, the live calls, previous playbacks. And then after that 7 day trial is up, should you choose to stay with us, membership continues at just $50 a month. All right. We exist to basically provide clarity during periods of financial transition, just like right now. So, with that said, you all are welcome to join skytonacademy.com. No promo code needed. All right. Let's connect these dots. So, first and foremost, the global financial system right now is responding to pressure. That pressure comes from scale, it comes from debt, and it comes from a lot of limits to current efficiencies. The current system that we're on, it carries all three. The US holds right now, present time, $38.5 trillion dollars in national debt. You got the interest that's rising on that every single day. You got the deficit persisting even during these periods where we see a little bit of economic growth, right? Our purchasing power, where we see it everyday grocery stores, at the gas pump, etc., right? We're making these adaptations, but a lot of these things are happening and is declining steadily, but the wages, the savings, the fixed income, all of these things, nothing's really changing, right? All of these forces are helping to shape policy decisions that's happening all around us and the way that money is moving. And that's called capital behavior. Now, this type of environment is encouraging everybody to adapt. And governments, institutions, they're no different. They all have to modernize their current systems. So when the institutions are starting to look for certain things to change into, they look for efficiency, they look for trust, they look for individuals like us who want protection. These type of responses all occur back to back to back. It's like a snowball effect. So throughout history, We've seen periods of time where you've had high debt and you had currency pressure all coincide with increased demand on hard physical assets. And this is what you're seeing right now. Gold, silver, commodities alike, they all are rising. New settlement technologies are all emerging. The current environment is following that pattern to a T. Now, I'm going to tell you why this moment exists right now. So, timing matters because multiple pressures all converge at once. Debt accumulation is going to limit flexibility. Global competition is always going to increase during these times. Everybody is looking for their flag to be imprinted. They're trying to stake their claim. You've got settlement speed and transparency mattering now more than ever. People are tired of getting scammed, they're tired of being robbed, and they want transparency. They want honesty, right? Now, inflation, something that we all have been dealing with, it's reshaping how decisions are being made inside of every household. Crypto regulation appears because digital assets right now are the intersection between custody, settlement, payments, and capital markets. So you got hard asset demand rising, and you got people seeking preservation of their purchasing power. These behaviors by itself, this is what reflects rational adjustments or adapting to the system's stress levels that we're currently facing. So this moment represents a huge shift. So we're going from experimentation, is what they used to call it, to integration, full on. Now, right now, tomorrow actually, there's a US crypto market structure framework that's going to be discussed and voted on, right? It originates from Congress and it was shaped primarily by the HFSC, that's the House Financial Services Committee, and also the House Agriculture Committee. Now, both of these two, they oversee securities markets and commodities markets. Now, this is important that people need to understand. So follow me. Digital assets operate across both of those domains. This framework that they're going to be voting on and discussing, this defines how digital assets are going to function as an investment contract, whether they fall under securities oversight and then assets that operate as decentralized commodities, right? Or just assets, period. They're going to fall under commodities oversight. Now, these two clear definitions enable any institution to be able to come in, know that something is regulated, and they can participate in it legally. Now, regulatory clarity is what people know it as. This responsibility is going to be divided up. It's not going to be one player like we had in the past. It was mostly the SEC. That's a thing of the past now. Now we have the SEC, they're going to oversee digital securities, and then you got the CFTC, they're going to oversee commodities. So you got things like custody, trading venues, or trading platforms. You got settlement standards. They're all aligning with these different type of classifications. And this legislation is going to establish that long-term rules of the road financial infrastructure. That infrastructure is what's going to enable tons of capital to be able to flow in here. And then you have big institutions and governments to be able to participate. And we have what's called market stability. Now, this is an emerging market, crypto as you all know it, blockchain, distributed ledger tech. All of these things are now being integrated, and you're starting to see banking institutions all begin to work with certain key players, right? And this is not mostly in mainstream news. You kind of have to be tapped in the Skyton Academy to be able to follow this stuff if you're not doing this on your own and actually going through the trenches and finding this info. Now, I'm gonna tell you why this actually matters. So markets function through infrastructure. Infrastructure is what's going to determine speed, the cost of things, and the amount of trust that people have into, traditional markets. Right now, traditional markets, they settle transactions. Of course, as you all know it, it's slow, it's outpaced. It takes several days. That delay is what introduces something called counterparty risk. And it's basically inefficient for money movement in this current system. It's worked for many years, but let's be let's be real here. We got things like third-party apps, we got Zelle, we got Venmo, we got Cash App, etc. All of these type of things are examples, real-time examples of how money is supposed to move. I can send anybody on this call a payment damn near instantaneously now, right? And it's at a cheaper rate than just going through your bank. So I want you guys to understand when you start to introduce blockchain-based settlement systems, this stuff operates continuously, right? It's faster. It reduces any kind of exposure. It improves the way money is moved and the way money is used. And institutions love that. That's what they value. They value efficiency. So regulators right now, they value transparency. So when you look at blockchain infrastructure, this is going to serve both ends of that spectrum, right? Adoption always follows incentives rather than little small narratives you hear here and there. All right. And speaking of narratives, this past week, there was a big, huge event that we make mention of, and we gave you guys the heads up. Every year we've been covering this pretty much since Skyton Academy has been around. It's an event called Davos. And in order for you guys to understand why crypto is now part of US policy, you have to understand Davos. So, the World Economic Forum, or the WEF, commonly referred to as quote unquote Davos, it's an annual private gathering that they have in Davos, Switzerland. And it happens once every year, typically around January, right? Top of the year, first quarter. Davos is definitely not a public conference. It's by invite only. It's a forum, right? And this is where the most powerful decision makers, policy makers on the planet all align themselves on the future of the global economy. So all of the big dogs around the world, princes, leaders, everyone, they're all here. And what they're doing is, I'm talking about heads of state, prime ministers, central bank governors, regulators, institutional investors, CEOs of the world's biggest and largest corporations. They're all here to discuss policy, capital flows, technology, and the direction that all three of those things are kind of headed in. And they do this long before the public really gets like a bird's eye view of this. The good thing about right now, we're in the age of information. So you're able to find out a lot of this stuff, faster than you would hear about it just simply sitting in front of the dummy box and getting the news, right? So I'm gonna tell you guys what happens. I'm gonna cover a couple of the shifts and a couple of the themes over the last couple of years, just to give you guys a little bit of context. So basically, what happens at Davos, this matters because it shapes everything. This is where governments, institutions, and corporations all align on one common direction, right? One common theme. Now, I'm gonna cover the themes from about 2024 up to date. So in 2024, the theme was rebuilding trust. Crypto conversations were almost always focused on legitimacy, right? Back then, they were working with um, a couple blockchain companies and fintech companies, and they were trying to see if this technology would actually work in a lot of the existing systems, right? The infrastructure that was already here. This is when we started to get discussions that were based on regulatory clarity, right? The rules of the road, what is legal, how can inventors and different companies basically be able to come in and position themselves. What's legal? What can we do? What can't we do? What limitations do we face? Right? And this pushed a lot of innovation overseas. Now that a lot of that innovation is right here, and Trump has stated, him and this administration, what they want to do is position the US as the global hub for cryptocurrency. You have to look not only here, but you have to broaden the view. You now have to look across the world. You have to see who the United States wants to work with, who it's aligning with, what technologies are emerging, right? What systems are now being impacted. And truth be told, it's everything across the board. Now, in 2024, they were talking about regulatory clarity, institutional custody. We had a bunch of pilots that came up for tokenization. I know you guys been hearing that buzzword for quite some time from us. And then now stablecoin settlement infrastructure. That's huge, right? Because everything right now is about stablecoins. Now, this marked the moment that crypto stopped being formed as quote unquote speculation, right? And people started to really discuss it as being financial plumbing. Then in 2025, the theme shifted to I think it was called reimagining growth. Now, the crypto convos move from whether it belonged to how do we implement this thing, right? How do we actually make this thing work? So let me slow down. All right, so crypto discussions when they moved to, if it belonged here to let's implement this, everybody started focusing on tokenized bonds, treasuries, and funds. Now, for everybody in the chat, just out of curiosity, I just want to see where you guys are at. Why do you think that was the case? That the conversations focused in 2025 on tokenized bonds, treasuries, and um, real world asset tokenization. Anybody, just drop your thoughts in there.
I just give it to him, bro.
All right. So I can't, and I forgot this thing is a little delayed. So y'all,
Yeah. So it's gonna be long pause. Yeah.
yeah, my bad, y'all. So I need people to understand that real world asset tokenization became central because this is the focus. This is where the most money is at. They're preparing everybody for what's about to happen. But the thing was, they were already pre-prepared for this years ago. These tokenization pilots, they came around when CBDCs came out. So this was back in like 2019, 2018, right? Davos. We're in 2026 right now. So these guys had almost a decade head start on focusing on these markets. These markets have the most capital, and this is where the most attention flows to. All right. So when you start to kind of put that into perspective, yeah, it's about government control. Yeah, it's about, can the banks get in? But when you think about it, they already had the plan. All of this is right now is implementation. Now they're setting the table. They're already prepared for what's about to happen. It's us, the retail investor, the everyday person that has to be able to spot and identify these opportunities and where things are going and dive in. All right. Strategically, not just through emotion. Ever. Never tie your emotions to investments. Now, now that you know what became central in the conversations in 2025, a lot of on-chain settlement started to replace all of those old legacy rails, right? The stuff that started to become mainstream was all institutional dialogue. This is when you started to see the Bank of Americas, the Bank of New York Mellons, the HSBCs. You started to see all of these big behemoths worldwide start to come out, almost like NDAs might have expired. Right, that's a little bit of speculation, but that's what it felt like from my vantage. Um, they just went public with a lot of the news, so then you were really now allowing yourself to be able to connect dots with big players, and that matters. So now this year, 2026, the new theme was all about collaboration for the intelligent age. What do you think they're referring to? It's artificial intelligence, right? But not only AI, you got to think about the infrastructure behind it. So data centers, crypto, tokenization, right? Real world assets, they're all now being mentioned as part of core financial infrastructure. They're framed as settlement layers for global trade, global liquidity movement. And we're talking about capital markets. So this ain't just small transactions between two people. These are huge billion and multi-million dollar transactions that are happening, right? For commodities, for oil, precious metals, etc. Now, you also have to think about this. When you think about artificial intelligence, if right now everything is starting to grow and they're starting to expand, and the US is starting to align themselves with other countries like Dubai and the United Arab Emirates, now they're doing this on purpose. So they're getting billions, damn near $1 trillion from multiple countries for investments in artificial intelligence data centers. That is going to take a lot of rare earth minerals. That's going to take a lot of commodities. And what they're going to need is clean energy. All right. Remember those things. Those are context clues. So at Davos for this year, Blockchain was all about foundational infrastructure, right? No longer an experiment whatsoever. So the attendees, presidents, prime ministers, central bank governors, leadership from the IMF, the World Bank, the Bank of International Settlements, all of these are the biggest entities and agencies from around the world, and they basically control all of the banks under them, from the central banks down. Now, you had CEOs of global banks and asset managers that were all attending this, and they're sitting shoulder to shoulder discussing financial infrastructure. So, of course, what they were talking about was blockchain, crypto, AI. You had BlackRock, you had the CEO Larry Fink there. He had a discussion about an hour long, and he dropped a bunch of nuggets. You had J.P. Morgan, Chase, Goldman Sachs, Microsoft, Accenture, Deloitte, of course, Ripple. You had other companies too. You had Coinbase, Chainlink, Circle, Consensus, Avalanche. Many of these companies are crypto-based companies that we've been talking about for years. So this is early positioning, you guys. Executives like Brad Garlinghouse, Brian Armstrong, Jeremy Allaire, all of these guys were participating in these policy discussions. So now you had in the past administrations, you had guys that were on the sidelines that couldn't even basically get into these rooms to have these conversations. Now they're all lining up in droves, and it's multiple players here. All right. So this is when you start to set the table and you start to see, all right, interoperability is big. All right. Now, here's why people need to start really paying attention to this. Whenever something happens at Davos, it normally happens next in the world. So it doesn't like recap what previously happened. Whenever you hear any kind of narrative come out of Davos and it finally reaches the mainstream, the infrastructure is already built and the capital is already waiting, it's already in position. So you got to understand these signals super early, and that's what's going to create clarity. This is why education matters. This is why you have to get the education and the information first before you start throwing your money at anything. All right. This is why research matters. Understanding real world use case. That's called utility. That's what separates noise from a signal. Now, this is something that everybody's familiar with. Steve, I'm gonna go through this and then you could dive in and kind of tie in your part. Um, People right now are starting to see all of the dominoes in place. And this is what is reflecting in real world behavior. So last dot connect on episode 125. If you did not watch that, this is your first time joining us or being with us, I want everybody to double back and watch episode 125. Steve absolutely smoked the gold and the silver discussion. He gave the recommendations, the method that people can purchase. And we have two I'm going to discuss here, but he also gave an alternative method where people can get in and not actually have to have tangible metals. That's super important. All right, especially right now when everybody's in a frenzy to buy tangibles. So during that call, he broke everything down. He gave real time pricing, real strategy, not financial advice, of course. Now, today, I want people to understand that silver is trading around $117 per ounce. That's amazing. So we're at new all-time highs, and then you're seeing gold. Gold is trading at 5,400 right now. I think it was 54.21 at about 6 o'clock, the last I checked. These moves right now are just showing a sustained demand, right? We did have a little pullback that happened in silver and gold, but I mean, that's normal. Everybody was forewarned that volatility is going to happen, but that's going to be to the upside and then healthy pullbacks. Um, Now, people must understand that when you see these type of moves, they do show the demand is happening for tangible assets, hard assets. But what's happening is people are trying to preserve their purchasing power. They're trying to basically retain the money that they have. So they're moving their money around. It's not just in paper money. We all know that paper money, that fiat currency, is not even worth the money that it's printed on. So tangible metals are a way to hedge against inflation, right? And currency debasement. So you got gold and silver both serving as monetary hedges. Now, there's a opportunity that exists when you think about this. If you see gold rising and the upticks are violent, you see silver doing the same thing. You have to understand if you've been with us for quite some time, you were early position. You got in at a different entry. Now people are emotionally investing and they're chasing the green candle. This is something that we tell you guys inside the academy never to do, right? It's always about being strategic with your movements. So I discussed this on Connect 124. It was the episode before Steve's. I was talking about copper as an opportunity, right? That's an emerging opportunity. And at the time, tangible copper, the availability of it was damn near limited across everywhere. I think the only place that had it at that moment was JM Bullion, right? And it was on pre-order and it was limited to how much you could purchase per order. So right now that copper demand is still growing. So that's one of those things that I want people to just understand that that is another opportunity. But what people are doing right now, this matters more than any headlines. It's watching people's behavior because this shows conviction. We gave gold and silver way long before. I believe this was in 2023, if I'm not mistaken, right? We gave this before it was a mainstream conversation. Silver was about, I think, 18 to $19 an ounce, and gold was around 1900. As of today, like I said, silver is at 117 an ounce, gold is at 54.21 an ounce. Those movements are showing you like there's sustained demand for these assets, and people are just trying to hold on and grow whatever they have. And strangely, it's wild, but silver and commodities, period, are actually outpacing crypto right now in performance. So this is really dope to kind of see what's going on, but also it's telling us a clear message and a clear story. Um, on I think 2 days ago, I think it was the 26th, silver had like one of the craziest, most volatile events that happened. It went up, I think, 13%, and then it dropped back down to 100 an ounce, and then it went back up to it was 117 today. So it was 115 where it went back up to. So that was violent. I don't know what that was about. I honestly think there was probably a couple players that, was just moving around and people wanted to move and kind of seize some profits. But that was a violent move. All right. Um, I want to talk history real quick. So I was looking at this chart, and Steve actually was the one who put me onto this. I went back because I honestly didn't know that silver had hit $50 at some point in the past. I never knew that it even went that high. So I went back and I went back to the 80s, right? In the 80s, and then again in 2011. Silver moved parabolic and then it corrected sharply right after. There was a long-term cycle that was happening where it kind of looked like it was trading sideways for a second. It spiked, came back down, healthy retrace. So what I want people to understand is you have to know something doesn't just go up continuously and never stops. That's your emotion. That's greed. That's hopium, right? 20 to 40% pullbacks, they're normal. Even 40 to 50% corrections, they can happen during these momentum phases, right? Volatility doesn't signal like a failure in the demand for it, like that demand just went out the window. It's showing you expansion. Silver always rewards people who are disciplined, prepared, and patient. So this is why I wanted to bring forth copper. Copper, the inventory right now is sold out still across major retailers. I've been looking everywhere consistently, day in, day out. I've seen people, this is not financial advice. I'm not telling you guys this is where you need to go. I'm just telling you what I've observed. I've seen people selling their own lots. I've seen people going on eBay, Amazon. I've seen people just everywhere, right? Looking for gold and silver and copper. And what I've been noticing is everywhere is getting tighter and tighter on the supply of copper. Even right now, 1 ounce rounds and 10-ounce bars right now, they're at some places they're even on back order for half a year to the next year. So that's showing you that demand is significantly high right now. And this is even before the silver rally is happening. So right now, timestamp this January 28th, 8:05 p.m. Copper is about $6 a pound and it's about 13,000 per metric ton. The deficit globally for copper, it's reached 600,000 tons already in 2026. And people got to understand that copper is powering electrification, infrastructure, that AI data centers, right? That's the main key factor people got to pay attention to. And in any kind of modern grid, the supply can't expand fast enough to meet that demand. So, of course, short-term pullbacks, 15 to 30%, that's normal, right? In any strong cycle, they show market mechanics, right? It's not a failure. Silver, excuse me, it's teaching people right now that volatility is going to happen. It doesn't matter what commodity you get into. Copper is teaching you structural demand patience. Inside Skyton Academy right now, we have two methods, two paths for any and everybody to be able to invest in commodities. We've got Glint Pay, where you can get fractionalized digital gold and silver, right? And I'm gonna drop the code for you guys here on YouTube so you guys have access to that. That does have a code, has an invite code, so do not forget when you guys copy this to ensure that you guys input the code. All right, dropping that now. And then the second option, where you guys can get actual physical metals, that's called at cost metals. And I'm gonna drop that for you guys. And this information will be available in the description when we have the replay up. But understand that pricing matters, premiums matter, timing matters. Chasing these green candles is always going to introduce a different type of risk. Those are normally the people that get left with their pants hanging down. Wait for pullbacks. This is strategic, right? Have a strategy before you start doing something. And before I get out of here, always understand that this is not financial advice. We're not financial advisors. We're just telling you guys strategically the best moves that you could potentially make. This is something that I'm personally doing, that Steve's personally doing, and we're not bringing you guys anything that we don't do ourselves. Um, yo, Steve.
Uh,
So you smoked that Dot Connect 125. What are you seeing right now with well, if you want to just add to it, you can add to it. But I'm curious, what are you seeing right now with gold, silver, and copper? What is this telling you?
every time in history that gold and silver starts to outperform everything else is always one indicator, the economy.
Turn your bring your mic closer.
Can you hear me?
Yep.
Yeah, it's always a shift in the global economy, people losing trust in money, right?
Hmm.
What I'm really realizing with just being first generation understanding financial literacy, wasn't born into this. What I'm starting to realize is September of 2023. When did we start the academy? 4 years ago, right?
Hmm.
So we're talking about 22.
22.
So
Yep.
in 23, this was one of our first official master classes, actually, I think that we did. And it was called the Plan One, where we talked about the social credit system, the Fed Now, CBDCs, right? We were
Yep.
talking about de-dollarization. We were talking about BRICS Nation was a topic of discussion. And we were just connecting dots at that time. Really, I was new to the internet, new to teaching. The style was a little bit more brash. I didn't live the commodity game prior to that, right? We were just picking up data, picking up information. So in September of 23, we did the plan two. I mean, the plan one. We also released a bonus on that one. And if you're in the academy, it's there for you to see it, right? Where we gave out ways that you can invest or hedge against inflation. This thing has been brewing since after the pandemic, right?
Facts.
We printed more money in that 1 year just to get the economy back again. So people who knew these cycles were already lined up for this. So let me just give you an example of what when Kurt talks about opportunity costing, this is it right here. Mind you, when you first get a piece of information, it doesn't mean that you're going to be all in or that you even believe it or have strong conviction to be able to put money into it. So now we're back full circle again. Okay. And I'll connect the dot to why crypto is important and it's the next wave of this next cycle that's about to come. We know the AI bubble is about to burst in a minute. We know that that whole thing is totally fake. The numbers, I could dispute this with anybody online. Um, they've done this before in other markets. They prop things up. Just when you think about one or two companies that are holding up the entire stock market tells you how fragile the times are. So what's holding up those one or two companies? Smoke and mirrors, guys. All right. So when in September of 23, when we dropped the plan, we were talking about, picking up coins and hedging against inflation, getting your money out of the banks, right? Banks all didn't fail just yet, but we're here, right? Same topic. We could put this plan out every year until it happens. So I'm just going back in my notes. The price of silver at the time, I believe, was like around $20,
Yep.
23, right? The price of gold was around $1,900 an ounce. Okay. So if you would have invested, and I went, let's go $1,000, right? If we would have did $1,000 in gold at that time, it would have got you just under um, about 0.518 ounces, right? Today's value at 5,000. I just have it at 5,000 now.
Hmm.
Where are we at with gold price?
54.21.
All right, so I just did this at 5,000. It was 25, almost $2,600 off of that, off 1,000. That's around 160% increase from the time that we put this out. This is gold. All right. We also told you on that call that silver is dollar for dollar the better investment to go with. One, because it was cheaper, and two, it's scarce. Right. So when you look at silver in 23, if you would invested $1,000, you would have got 42.6 ounces of silver at today, well, $107 price, you would have been at around $4,500. So now we're talking about opportunity cost now. Now there's guys who've been buying this thing forever now. Okay. So same situation, same scenario at $5,000, you would have about 2.59 ounces of um, gold, which today's value would have been off of 5,000 would have been just under $13,000. A little bit more because I'm only going at 5,000, not 54. And then for silver, if you would have did the same thing, it would have been 212.77 ounces. And today's value on $5,000 would have made you over $23,000 in silver. So same thing happened just in December 6th. We bought on, I was just looking at our YouTube playback of At Cost Metals. That was when we bought on Rick. Again, even those prices back then were still high. We were talking about a $30 silver and just a little higher than 2,000 on the gold side of things.
Hmm.
So, same situation. When he talked about the 80s, we were going through a lot of currency debasement. We were just leaving. What you have to understand is you have to look at things in cycles, right? So when Davos is doing the 10-year situation, it's kind of how they present their things, right?
Yep.
So it wasn't so much the 80s, it was what happened in the 70s. This is coming off the gold standard, right? This is the debasing of the money. This is the printing of money. This is the start of this, the killing of Bretton Woods. We talked about all this before. So when you look at what happened in the 70s and how it affects you 10 years out, this is where it went from $1.50 or whatever in the 70s to $50 in the 80s. Now, what Champ didn't tell you in there was a category of people called the hunts. These are people that are chasing the $50 price. They got smoked. They got smoked. They do this every single time, guys. They find a way to change the rules and then they create liquidity events in the market. And they start with the paper transactions first. That's why I wanted you guys to understand how they're trading this stuff in the back end because this has nothing to do with raw physical silver
Hmm.
at all. Nobody's even moving it right now. So this is paper. This is JP Morgan that had a short. And next thing you know, it ran up. And then before you know it, this connection points were saying, oh, they had something to do with this oil and they had to like, they needed some money to all of it makes sense because it just sounds crazy. It's like, why aren't you paying your what you owe? You put a short in on something, you got to win every single trade. This is how these guys operate. So they find another way to cover those losses to then keep the train moving. And look at that short right now. God knows how much they owe. So you tell me a guy like JP, they just didn't read that well. So that's what's happening right now. So when you look at it, there's opportunity cost. And why I bring that up is because the same person right now on this call is twiddling their thumbs, thinking about cryptocurrency. That's the last and final wave of any financial boom that's going to happen in our time. We see what AI can do, right? And I'm not saying that they're not going to have much increase after that, but this is about to level out in a minute, right?
Mhm.
We can see what gold silver does and we know how they perform. And if you keep thinking that this candle is gonna, shoot to the sky, all right, keep listening to those analysts. Yeah, I heard 12,000 an ounce. I heard 6,000 an ounce. I heard 20,000 an ounce. I've heard $1 million Bitcoin. I heard $2.5 million Bitcoin. I heard $25 million Bitcoin. Okay. So depending on what you want, where your value system or your belief system wants to kind of resonate to, that's where you're going to be locked in. That's why those Bitcoin guys are a bit rabid in my world because they're not focusing on like what the technology was put here for. They're just hyper focused on this having, and then every 4 years and this happens, they literally are acting like this is a legacy play that can't even go away. It's another concerted effort to make some shit up the same way they made up taking us off the gold standard and just said, we'll just print it. There's no difference between it because it has no intrinsic value. It does nothing. But somehow, if you build enough trust around anything, you can prop it up. Again, Kurt tells you that this Bitcoin is an emergency generator to keep these guys hedging and to keep ahead of what they know is about to happen. This was an asset class that was put here. Really, at the end of the day, it's the most controlled form of technology known to man ever.
Yep.
Right? It's able to surveil. It's able to, they sell you on autonomy and all this other stuff. But it's like, listen, in the wrong hands, you will be begging to go back to trading cattle with people. Like you would want to slow this thing down. So I say that to say that if you're not looking at cryptocurrency right now, you're going to miss the last wave. This is what you call the wealth transfer. You're just watching money move from one industry or one product to another product. Then you're watching how these guys are sheltering that. You're watching how these guys are borrowing against those portfolios, which is something that we don't do, right? This is the part that you guys are missing, how these guys move money. They're not just parking this, it's a value. They're doing something with it. All right. Buying assets, land, real estate. These are all things you got to buy smart. You understand? That's why I say, look out towards emerging markets right now. Because if you look at any market and look at any growth over time, before countries become superpowers or before areas or coastal lines become the it thing, there is always that infancy stage of that growth. So when I say look outside the U.S., it's because the U.S. is on borrowed time right now, right? We're sitting on a high dollar. This is the first time that in our generation that we're actually feeling the effects of it as an adult, right? Um, I'll leave you with this one. I'm gonna tell you how bad this thing is gonna get. And again, if you're informed and you're making the proper moves right now, it's a transition. You might feel an aftershock, right? If you're sitting on the fault plate and you're playing dumb, you might feel a little bit more than that. All right. So when Trump talks about the lowering the interest rate on the credit cards, and you guys are championing this situation, you got to look at the sum total of the situation, right?
Mhm.
When the news breaks on something, I need you guys to do one or two things. First, don't believe anything that they're telling you, right? I saw this podcast the other day, and guy was like, "Yo, if you just look at everything and just say maybe, just maybe, right? Could be a chance. Could you're just not even invested in it, right? Now, give yourself enough time to research it. Who benefits off of this, and who doesn't? So at 10%, you would say what, champ? That's pretty good. Cap the credit cards. Why
Straight up.
not? Okay. Now, when you start to look at the other side of it, it tells the full picture. Now, the other side says, well, if you lower it to 10%, guess what happens to the capital, the debt market? It goes away. No one's going to be borrowing. No one's going to be lending money for you to borrow at 10%.
Hmm.
What they're going to do? They're going to cut your credit cards either off or limit them, right? And there's going to be no new products that are created for people. So you're talking about an American population that requires debt in order to float their livelihood. So which came first, the chicken or the egg? You want to start being responsible and let go of all the shit that you don't need and start over? Or do you want to keep accumulating this debt and then just be part of that debt bubble? That's inevitable. And that's what Trump is here to do. They're here to reset the entire system. And in order to do so, you do it through policies that are going to cripple whatever agency or product it is. And that's all they're looking to do right now. There's a concerted effort to take down every single piece of this old financial system and its legacy rails that are happening right now. And the people at the bottom are the ones that are going to feel it because we're the ones that rely on it the most. And the guys who are educated are the ones that can always sidestep these times. So for everybody who's making money in these times, that means that they're taking money out of somebody else's pockets. So what are we funding? What are you investing in? And if you have zero investments and you're like, "Yeah, trust me, you are making somebody rich as a consumer. You are making somebody rich as somebody who is um, uninformed and totally ignorant right now to just what's around them. And if you think working and saving and working and or just paying the bill and being check to check is going to work, what happens when that ability is cut off now? This is the part where you can't save or work your way to wealth. So now you have to figure out how this works. So that $1,000 in that silver just 2 years ago would have been 13K right now. Could have went towards a bill. Could have liquidated some stuff. Could have maybe borrowed against it. But now you have to study and make sure that you're not in what they call the hunts. The people who are going to be stuck at the $100, the 200,000, the $500 gold. This ain't about dollar cost averaging either, guys. It's not like you've been buying gold since it was like $200-300, and then our parents just gave us shit, and then we got this low situation. People are coming in right now at $4,000. The same way people are holding Bitcoin at 100,000, and I'm not talking about one Bitcoin either. We're talking about just fractional ownership of it. So now the dream is to go where 1 million. So we're talking about 10x right now.
Hmm.
So from the 70s to the 80s, you could have got 25x on silver. This has happened before. I won't be surprised if they run Bitcoin up $1 million, but it's only a 10x for guys who are just getting in right now. And then ask yourself, when's going to be that liquidity event that's going to take this thing down? It's technology. Ask yourself, when is it going to be that technology that can actually crack that code? And we know that it's happening right now. So what does Bitcoin have to do? They have one or two choices. They have to do some updates, but nobody knows who the owner is, but somehow they still keep doing updates. This is the one part that these Bitcoin guys could never riddle. We know every single body who has been the early coders to this technology, but somehow people are still falling for the banana in the tailpipe situation. I'm not here to bash any one thing. I'm just here to pass on a message to you guys that when you hear certain things come across your way, Champ and I have been in cryptocurrency for 10 years. That means we have time in market, and that's what we get, right? If we would have studied guys who had time in market and commodities and really took that stuff serious, we probably would have at that time.
Hmm.
But this information is just now coming to the culture. So I'm telling you, if there's any market that you guys should be looking at right now, it's cryptocurrency because you're talking about tokenizing bonds, right? Putting them on chain. This is going to affect even the global economy. I don't care what they talk about with the de-dollarization. This changes the game here, right? Then you're talking about bit bonds, tokenizing that. Then you're talking about the reserve currency and people borrowing against stuff. Guys, there's going to be a lot of liquidity moving inside of cryptocurrency because it's the financial structure and the backbone of how everything is going to operate in the future. Right now, this is just old stuff. This gold and silver shit, this ain't new.
Hmm.
There's going to be one or two law changes. They're going to change the paper in the capital market instantly overnight, and they're going to create liquidity events. There's going to be minimums that people can't meet, and you watch what happens to that price because it has no effect on supply and demand.
Yeah.
Another orchestrated shit done by these elites. Who loses? I mean, how much money do you think retail will have in gold and silver in all forms? So we're just telling you, just use it as a hedge. I got the glint pay. Yeah, there's
Yeah.
money on there. I liquidate the joint. I keep it simple. I'm up. That was since 2023. And then the same thing with the at cost metal situation. So when you can't find places to buy and you have direct contacts, you didn't know how important that was when we bought Rick and them up in 2024. You know what the biggest tragedy is going to be? This bank collapse and these bail ins. Nobody's going to believe that the bank is going to take your money and it's right in the rules set forth by Obama that signed it. And none of these other presidents got rid of that situation for the bail in. So now what you going to tell yourself? That you didn't know what to do. They're literally giving you the playbook of how to hedge against inflation. Metal's not supposed to go up the way that it's going up so violently right now.
Right.
Because trust me, when the world evens out, it's coming out of metal because there's nobody that's going to be busting down gold in the grocery store. I don't care what day and time. They barely know how to count cash. Never mind, take this shit back to the pay the scale. Yeah, right. Yeah, come on, man. Just think about it. Like what store do people go to the most? The grocery store. You think they're
Absolutely.
gonna be holding bars and be able to how are you transacting with that?
Definitely not.
All this, yeah, legal tender in states. Yeah, they're orchestrating a story, man. Nobody's going to the store to use gold to buy anything.
Hmm. Yep.
You've seen a little bit of crypto transactions, right? There's some dealerships you can go to. There's houses. There's things. Like you can see how that money can move fast. But what do you bring into the bank or the grocery store? Some bars. And we told you if they're gonna do that, then you might as well have silver because it's gonna be so hard to break down an ounce of gold. Now you're gonna go in there
Oh,
with $5,000 and you got a $20, bread and milk.
right.
Who's got the change? So I'm gonna just leave you out with that. But please take cryptocurrency serious. And then the next thing is the debt market is our next bubble. Right after that, we're gonna have the educational bubble. Right, all that money y'all putting into college, that's about the bust. Dollar for dollar is done. Um, so you got the debt bubble, the education bubble. Oh, bank failures, bail-ins, and it's all going to be tied to what the World Economic Forum has been talking about, and they warned us 10 years ago, and now they're about to institute it now before 2030, and that's the blackouts.
Absolutely.
So I'm telling you in that exact order. When they tell you when the lights go out and then your banking stuff comes back on, they're like, "Oh, we're only able to save 30%. We need to switch you over to CBDCs and all that." You'll take the conversion on that 30%. They'll keep the 70. Then you got to figure it out. So any which way, we headed towards wild times, and you either get on it and you got to feel this, guys. There's no body in the world that can like really make you do something. But I mean, just start really taking in the information at this point, and then just study patterns in history, and they'll tell you there's nothing Champ and I are doing outside of figuring out this pattern and
Hmm.
just seeing where we fall into. And I get it at this point now. Nobody has money to invest. Why? Because inflation is just that. Yeah, government, when they printed all that money in 2020, you don't think that they knew this was going to cause this? And inflation is nothing more than the government taking back money from citizens at the end of the day because we didn't know how to hedge against inflation. So when you got four or five other things making you money here and you got, you're sitting on six figures in commodities, you could kind of withstand, some turbulent time if you live within your means.
For sure.
But shit, how's that Turo going with all them cars, man? Where's everybody at with them joints? Car loans. Y'all seeing the car loan reports? It tells you everything about where we at right now.
You're not.
No one's getting like everyone's getting denied for these things left and right now.
I was
There was
about
a
to
time
say.
people were getting six, seven, eight cars and we're banking on an app
Yep.
after a catastrophe happened in travel and just couldn't read that, Avis and all them are going to open back up again. This is not going to withstand. I've been there before, guys, and you start to expand too fast. You're sitting on capital, which is debt, still has to be paid back. Trucking, right? There was a time there was no trucks. Everything was there. Now you look, the supply chain is dead. Nobody needs trucks anymore. And now they're about to automate the whole thing.
Hmm. Yep.
So you don't think at some point you would have lost on this betting on the automotive industry if you're not in automation? And you think these guys are going to let regular people just automate things and get contracts for stuff when they could lock up the whole situation with Tesla as a sum total? I've seen the new bodegas, the future bodegas. They're not selling these things to average mom and pop guys. They're moving it. This is the infrastructure of how America is going to be built and who's going to own it. It's all privatized, guys. This is the opportunity that's in America right now. So that's why I say look abroad, because these countries have the youngest population. They're not looking to like debase their currency. They're looking to build it. They're not looking to cause people any pain.
Hmm.
You know what I'm saying? They're looking to build. They're looking to educate. They're looking to keep people within the borders. They're looking to promote within. They're looking. This is first time home ownership, first time car buyers, first time everything. And you telling me with all this education and knowledge that we have, we can't do more damage in places that actually want us to be there. All right, so keep playing around. Where do you think they're investing their money right now? This is since Obama. He's the first president that was able to even penetrate Africa. That was one of his presidential mandates. If y'all didn't know what he was put here for, it wasn't about us. It was about what they needed him to do for them. It's a resource game, guys. This shit ain't personal out here. Everything's about expansion right now. And you have to have an expansive mindset to make it through this sort of situation. There's no more playing it safe. There's no more, yeah, I got this education and it's not worth the squeeze. So now it's the first time that not just blue collar workers, but white collar workers are in trouble. And you know who makes up a majority of that. And we know how well they do in times of strife. They'll be jumping off of buildings, man. Start looking up.
Straight up.
I'm telling you, you might want to walk in the middle of the street. They don't do well in these times. Smoked it today.
My God, man. Listen, man, I greatly appreciate you. You know what I mean? Doing this, having the insight that we have, and the tenacity to just, dig deep, find the information, correlate it, and then be able to break it down in this manner. This is next level. You know what I mean? This is truly what it's about. This is like purpose work. So I greatly appreciate you, and I want to give you your flowers on camera because this is what we do, but we don't hear it often enough. And there's so much more that we got in store for everybody else. But just from working every single day, shoulder to shoulder, virtually. You know what I mean? Steve's in Philly. I'm down here outside the A. But we lock in every single day to fine tune this stuff. So I'm greatly appreciated, man. And I appreciate you to the core, man, for this.
Nah, it's all good, man. It's all good. We know what we got on this side.
Straight up.
All right, listen, and I've read the comments, guys. Dot Connect has always been an open platform. We just moved over to YouTube just so
Mhm.
it's just more widely acceptable. So it members only is where we actually really do drop what we drop. What movement we on right now with the sovereignty and the different tiers and
Yeah.
how we're just preparing ourselves digitally. I mean, you guys are getting information that no one's going to talk about. You know what I'm saying? Like no one's talking about digital cages and how to move and how to protect your digital footprint in the future now. No one's showing you the technology and the alternative. That's the one thing. There's always an alternative to something. We just have to find it. We have to study it. The one thing about these white wizards and these Zionists is they always create a back door somewhere.
Hmm. Yep. That's a fact.
Knowledge is the only way out, guys. And I'm talking about implying it, not just like, oh, I know all things because I have a smartphone. Um, like put the shit to work.
Right. Demonstration. That's it.
This the year of cryptocurrency. We just wait for this Clarity Act, and then you'll start to see it. And you see all this tokenization stuff already happening, guys. They've been testing it for the last 10 years, on chain testing.
On chain. Yep.
Just nobody care about it until the prices go up. So I'm not begging y'all to do whatever. I'm just telling you that at some point, This is going to be a way of life. And if we miss the last financial language and it took us 100 years to figure that shit out, good luck on the next one because that one moves faster and it will reward speed. Money loves speed.
Mhm.
And if that's what y'all like, then you might want to start studying the future of where this thing is going. I can't make it any cheaper. Any cheaper, we're just devaluing it to the point where guys are like, it may not be worth it, but nobody has time anyway. So somehow everybody's making money doing something.
That's a fact. That's a big fact.
Good luck. Good luck. Take us out.
I bet. So before I get into this outro, big love to everybody who just joined us, whether this is your first time or you've been here with us. We greatly appreciate you tuning in. What we covered tonight was not just about telling you what to buy. It was essentially about teaching you how to think. Markets move, assets rotate, prices change. People who understand systems early move with clarity, right? People who don't react to headlines. The financial system is currently being rewritten. I laid it out for you. Steve did the icing on the cake. Crypto is now part of US policy. Hard assets are responding to currency pressure. Global institutions are aligning to this new infrastructure. It requires perspective. Our role, in essence, at the Academy is to give context, explain the structure, help you see what's forming before it becomes obvious. When you understand how money policy and infrastructure actually work, decisions come to you calmly and disciplined. That mindset in itself is power. It makes you the voice of clarity in your family, the reference point inside your circle, the person that everybody turns to when they feel uncertain. The investments come after that thinking. They're a byproduct of understanding, not the starting point. So, Skyton Academy, we exist to basically build that level of thinking. If you guys are looking for a home and you want to keep learning how to read these systems and basically position yourself with confidence instead of fear, join us, skytonacademy.com. You can start with a 7-day trial. It's just $1 to get started. We're not here to sell narratives. We're here to teach frameworks. And with the right framework, you don't just adapt to change. You lead through it. This is Dot Connect Wednesdays 126. Big love, y'all. We'll see y'all on the next one.